Okay, so in this video, I just want to talk about, how to go about developing your own trading strategy, right? It doesn't have to be difficult, right? In fact, simple is better. So I just want to share with you a framework that I use, right? Whenever I try to develop new trading strategies. So the first thing is what I call the if-then syntax, right? This is a term that will be familiar with most programmers, right? It goes something like, if I'm a boy, then I'll wear pants. If I'm a girl, then I'll wear a skirt. And, if I'm not a boy or a girl, then maybe, I'll wear nothing, right? So this if-then syntax basically tells you, what you would do if something were to happen, right? So this makes your thought process much more objective, right? So all of my strategies, right, I use this if-then syntax. And the second thing is, this is actually one aspect of the strategies that I use, right, is what I call the trend, value, and trigger. So this basically, right, is trading with the trend, right, from an area of value and then entering your trade when there is a valid entry trigger. So let me just walk you through how to, go about doing the trend, value, and trigger. So let's say, for example, right, up to this point in the price action trading program, you've learned about, the 200 period moving average, where I use it to define the trend. So let's say, for example, right, I can write something like, if the price is above the 200 period moving average, then I'll look to long, right? Because this is my way of defining the trend. And if price is above the 200 MA, right, then it means it's an uptrend and I want to long. Okay, so the next thing I could write is that, if I'm looking to long, right, then I'll wait for price to retrace to support, right? Support is an area of value, right? Support, right? Then the next thing I could write is perhaps if the price retraces to support, right, then I'll wait for let's say a false break pattern, which serves as my entry trigger, right? Which serves as my entry trigger. And if I get a false break pattern, then I'll go long on the next candle open, right? And place my stop loss, say 1 ATR below the candle low, right? If the trade moves in my favor, then I'll look to exit before the nearest swing high, something like that, right? So you can see that, based on just using this simple if-then syntax, right, I basically have a rough outline of what my strategy looks like, right? If the price is above the 200 MA, then I'll look to long because it's an uptrend. If I'm looking to long, then I'll wait for price to retrace to support. This is the area of value, right? And if the price retraces to support, then I'll wait for a false break pattern, my entry trigger, right? So this one over here, the fourth line, is basically, right, saying how I would enter the trade and where I'll put my stop loss, right? And the last one is talking about how I would exit my winning trade. So you can see, right, it's pretty, straightforward, right? The first one over here is the trend, my definition of the trend. The second one over here will be the area of value, right? And the third one over here is the trigger. So you can see that, using this template, right, there are definitely things that you can modify. For example, maybe you don't want to use the 200 MA, you can use, say, maybe the 300 period moving average, the 100 period moving average. That is up to you. Maybe you don't want to trade off support, right? You want to trade off a trend line. Or maybe you want to trade off pivot points. You want to trade off Fibonacci. Maybe you want to trade off, I don't know what, right? But as long, something that represents an area of value, right, that is something that you want to look for, right? And you can look for entry trigger, right? It doesn't have to be the false break pattern. It could be, basic candlestick pattern, like maybe, say, the pin bar, the engulfing pattern, or maybe just a lower close, right? Or a higher close if you're looking to long, right? And the last one is, you can see how you want to enter the trade. Maybe you want to enter the trade on the next candle open like me, or you want to wait for price to, trade above the high before you go long with a buy stop order, right? Your stop loss, maybe you don't want to place it 1 ATR below the low. Maybe you just want to put it directly below the low, right? I wouldn't really suggest that, right? I would say at least 1 ATR to give it enough buffer, but that is just me, right? And if the trade moves in my favor, right, you can maybe, look to take half at the nearest swing high and look to write the remaining half. So you can see that, there is really a lot of, changes that you can make to this simple framework, right? So there is, there is no way to say, right, whether it will work for sure, right? The only way to find out is you test it, record and review your trades, so that you can find out whether your strategy has an edge in the long run, right? But first, to actually develop the strategy, right, this is a framework that I recommend, using the if then syntax, right, using a trend, value and trigger, right? This is definitely a very simple strategy that you can use to start with. Okay, so with that, right, I've come to the end of this video, and I'll see you in the next.